Should you buy crypto in 2024? Let's be real, the altcoins have been suffering a lot in the past few months and crypto hasn't been great to be investing in 2024, despite if you were into meme coins or Solana. In this video I'm sharing all the information of the current structure of the markets and I'll be answering the question whether you should be buying crypto in 2024 or perhaps not. The markets have been seeing a heavy correction and multiple factors are important for this, as we've seen that macroeconomic factors and data is taking a large toll into the momentum of Bitcoin and altcoins, but also crypto intrinsic events are taking place surrounding Ethereum, surrounding lawsuits. Why are there so many variables pushing down the markets or taking place at this point? We're going to discuss this all. But before we continue, in my hand I've got a very important paper, and it's called a Wyoming Goldbacked paper or Goldbacked paper. One of my friends, Bart Brands, I've been having lunch with him a few weeks ago, and he has been sharing this on his YouTube channel, which is called Gold Republic, also the company Gold Republic, which is super fun. And I've received this document from him, or this paper, and there are so many things that I can think of with this just single-handed paper that is important to understand, and that's why I wanted to bring this up, because the question of this video is, should you buy crypto in 2024? And maybe you know that I'm also very much interested into other assets outside of crypto. I'm interested into gold and silver. I'm also interested into real estate, but not really into that market at this point yet because I think it's overvalued. But this paper is a gold-backed paper. So if you can see it on the bottom here, there's 1,000 troy ounce of gold is into this paper, which means that the representation of the value of this asset or this paper is going to continue to hold its value over time. So if the gold price is going to increase, then this paper will be worth more, which means that you can keep your purchasing power over time because it is actual gold. So it's correcting for inflation over time. The thing is, it is not an official legal tender. It's not an official method of payment in the US, because governments just don't want you to use any of these sorts of payments. They are better off by increasing the taxes and making sure that you need to pay more. Shrinkflation is also taking place, which means that the amount of money that you can spend on stuff, your purchasing power is going down over time, or the prices stay the same and the amount of consumption that you can buy for it is going to go down over time. We saw that with the Lay's packages or any other sorts of thing in the supermarket that is just shrinking over time. But the thing is that with this paper you can decide where you want to pay it and whenever you want to pay it, on what you want to pay it. So you can just decide, I want to use this for whatever purchase I want to do. The thing is, the government doesn't approve it, so you are not able to use it anywhere. But now the fun part comes. Stores can say, I want to accept it because I want to. And that is the strength of such an asset, which means that you can actually use this in some stores in the US. So you can actually use this gold-backed paper and purchase the assets that you want to buy, and the government doesn't simply know. Now, the final thing for this thing is that with gold you didn't have a very easy option to travel with a gold bar or anything related to gold. Of course, if you have a necklace or anything like that, you can take that with you, but it's quite hard to bring like large sums of gold. Well, if you think about this, Bart Brands was mentioning this too, is the fact that governments have large amounts of gold as treasury and they keep that just stored somewhere. All right. What they could do is they could use that gold and make this sort of paper, because if everyone is going to use a paper like this, the world is going to be way more friendly, as everybody knows that this is going to keep your purchasing power over time, and they start planning their lives instead of rushing to get into markets, making sure that they need to get an ROI or that they need to take risk. So by taking risk, they are able to keep the life that they have, and the living standard remains the same. So if you have this, and it's a super easy option, it's super easy to travel, I think the world can be getting way nicer. Now, why crypto? Why should you buy crypto in 2024? This is the representation. In this video, we're going to talk about banks collapsing. We're going to talk about the fact that the SEC is going to push back on Ethereum. We're going to talk about the fact that inflation is still super high. And we're going to talk about the fact that everything that's happening at this point is not to make your life better. So by buying this, by buying gold, by buying crypto, you step out of the entire space, you step out of the financial system that's actually crushing you. And I think gold is a good solution, but I think that Bitcoin, with all the technologies that are attached to it, is a great one to have as well. So that's what Bitcoin and gold have in common. It's a strong sellable asset that keeps the money over, or keeps the purchasing power over time. It's easy to transfer. And this is exactly why there is such a strong resistance against crypto in the US. But the more people that start to realize that they get screwed over by the government, the more that they will be starting to jump into assets like this or into crypto, because we can decide what we want to do and when we want to pay with whatever asset we want to do it with. So the more people that start to understand this, the stronger the crypto bull run, but adoption will be taking place, and then at some point in time it becomes a revolution. So that's why this video is important, on understanding everything that's taking place and also making sure that you take the right decisions when it comes to investing into crypto. So let's get towards that part, but I thought that was really funny to share with you, and it shows you that it's super important to opt out of this financial system. When we talk about inflation or we talk about macroeconomic events, we need to make sure that why are these important? Well, it's important because institutions are jumping into the markets. All right. So before we continue, the institutions have joined the markets, which means that the markets are going to be more dynamic and hybrid to events in the macroeconomic space. And why is that? Well, institutions generally don't really care about an halving. They do care about what risk they have in their portfolio, and therefore they want to make sure that after every macroeconomic event or any macroeconomic event that takes place, they want to reshuffle their portfolio. So that's why I think that the 4-year cycle is also going to be going away, and that we might be having that super cycle or the longer cycle because of adoption, regulation, and different players into the markets. And I think that the US is going to default at some point anyway, or at least get in trouble, which means that people want to opt out of the system. And that's why I discussed the Goldbacked paper, and that's why I discussed the fact that opting out is super important, that we can decide what we want to do. Before we therefore start discussing about the data, some important news items were released in the past few weeks. This is a tweet from Dennis Porter, and it is concerning the fact that the first pension fund, actually state pension fund in the US, has bought Bitcoin. It is the Wisconsin Investment Board, and it's the 9th largest state pension fund in the US that has allocated some funds to the Bitcoin ETF, and that says a lot. It says that as it is the first one, we are still at the first stage of pension funds allocating funds to Bitcoin. There are still 9 more in the top 10 that needs to do it at some point. That's also a case that Wisconsin is going to increase that over time. And secondly, we're getting into the stage of the governments and institutions jumping into the markets, which makes the markets a little bit different than what it used to be in the previous cycle. So this is super positive news. And also, insurance giant Mass Mutual has been reporting exposure in their 13F filings. That's a good part about an ETF. You've got the ability to see who's buying the actual ETF. And slowly but surely, more and more of those data comes in. And also, an insurance giant has been buying into the Bitcoin ETF and has got Bitcoin on the balance sheet, which says a lot about what stage we are into, as I just discussed, and what is likely going to come. Now, when we talk about what the US is doing, we had a very rough period in terms of quantitative tightening and a strong dollar, and that is usually not like if you have quantitative easing like we've seen in 2021 by expanding the amount of dollars that are in the open markets, that is when assets like crypto do really well. And maybe that is also the reason why the past week crypto has been surging upwards again. But what we need to make sure is that quantitative easing is already taking place. From June upwards, or from June, there's going to be a case that quantitative tightening is slowed down. So they stop the entire reduction of the balance sheet. And what they're going to do, they start off a program which is called a treasury buyback operation, which is going to be the first one since 2022, since 2002, in which they are going to expect to continue buying back treasuries until July 2024, which means that there's going to be, as you can see here, the Treasury plans to hold weekly liquidity support buybacks of up to 2 billion per operation, which can add up to, as it is around 9 to 10 weeks, can add up to 20 billion in total, which technically is a bank bailout, but it's also technically QE starts again. And that is why you can see that Powell started to become a little bit more calm on the inflation, and also more calm on the fact that the policy that they have right now is just unsustainable. So QE is happening already, and you can expect that based on this fact, inflation is going to pick up at some point again. The dollar is going to be weaker. Uncertainties about the financial stability of the US will start to increase. And also the fact that crypto will start to surge based on QE is very likely to take place, as QE is the big trigger of inflation and therefore of buying assets that are contrary to the US dollar, which is Bitcoin. So this QE is happening in front of our eyes. It's just not getting the big spotlight yet. Now, what has also been taking place is the fact that bank collapses continue to happen. We've seen multiple banks collapsing past year. It remained a little bit silent since then, and now we can see that the first bank of 2024 has collapsed, which is Republic First Bank, which officially collapsed and seized by the regulators in April last month it was, and I think it's the first of many. And I think that we're going to see way more of these bank collapses taking place. So that is the big part of the cycle that we are into. We are at the final stage of the US dollar. We are at the final stage of it. And the data starts to represent that already. Sorry for taking a slight moment, but I'd like to make an agreement with you. If you subscribe to this YouTube channel, then I'll make sure that I make the best content out there and the highest quality possible, and that we keep on improving the quality of the content that we make. Today is the 6th Finance Forward. It's out there where I provide everything surrounding my strategy when it comes to selling all my Bitcoin towards altcoins and more. But everything is designed for you to have a financially stable future and to get a strategy to make sure that you make the best out of the entire bull and bear market. There's way more coming up, a new studio, new production, fresh content, and way more, all designed to support the journey we have to create a stable future with a more financial freedom. When we talk about data, we talk about a website that's called Forex Factory, and I want to go back a few weeks in time because it has been taking place for a little while already. And I wanted to make sure that everything is being discussed accordingly when we talk about macroeconomics and the state of the crypto markets. So the state of the crypto markets were bad. First of all, macroeconomic figures were not great. The dollar continued to show strength. Inflation remained sticky, and therefore the economy was kept strongly there, which means that there was no real reason for rate cuts. But it's changing, and the data already shows that it is actually changing, which is the fact that what we see is already since the end of April that the data starts to become worse and worse and worse. Now, the first data point we've had here is the fact that the advanced GDP has come in 1% short of the expectation, which means that the economy isn't expected to continue to grow as they expect it to be. So it's actually a lower data point, which reflects that there's a weakening. Now, there's also and this one is not that important at all, but the consumer sentiment has started to go down as well. So these were the two first points of interest to make sure that the data has become worse and worse and worse. Now, the next week on Tuesday, April the 30th, we've got a consumer confidence data point. It is I would say financial confidence of consumers or retail clients or just the end customer, and it reflects the strength of the economy. It was 7 points off, which takes place since February already. It happens multiple times, but that's not the most important factor. It's the factor that the data itself was way lower than the past years. So the last time that we had this data was in 2022 and in 2020 during the period of COVID. So the confidence starts to decrease significantly already, which shows that if end customers are having a lower confidence, then likely we will also be seeing the fact that they start to spend less. And if you have this case, you technically want to see people spending their money to keep the economy going. If that stops, the Titanic goes down. Also, what do we see here? Chicago PMI, lowest number since November 2022. It remains negative all the time, but purchasing managers start to really halt their operations, which, as I just discussed, if consumers are likely going to spend less, then the managers are going to buy less, so the stocks will be less, and there you actually go. So that's bad. And from that perspective, job openings became bad as well. The Fed kept the entire level at the same stage. The PMI data starts to shift towards 50, but then we also have the unemployment data, which came in worse than expected. The non-farm employment change had a big miss to the downside. So less jobs were created and the unemployment starts to increase again, which shows the reflection of a weakening economic climate for the US. And last week we had unemployment claims which started to rally. It doesn't signal much yet, but it starts to signal a lot, especially since the consumer sentiment, which is a similar data point to confidence, has started to become negative as well. And this week we had CPI, which is Powell has actually been saying that inflation is likely going to continue to be having a higher data point, but CPI came in month to month lower than expected, and the year-to-year data dropped down from the previous month. So inflation is actually going down, and then the retail sales came in way worse than expected, which is a trigger that if what I just discussed with the fact that QE comes back, economic data becomes worse, citizens are not trusting the economy anymore, and the inflation goes down, it means that the trust in the dollar is going to go down significantly, through which the expectations of rate cuts have increased, and therefore we are going to see the fact that everything surrounding QE is going to go up. So if we look at the data points, the 2-year yield is likely peaking at this point, and we are at the end stage of this entire run here, which means that there's a very likely case that this is going to reverse back down as the economy needs to be adjusted. I don't suspect that this is going to continue to last. So the more that the yields or the expectations of the yields is going to go down, we suspect that Bitcoin is going to do really, really well. And I'll drop into this data in a little bit. The dollar also started to drop. As you can see, CPI data came out and we saw this big drop here. Now, if we go back in the terms of when did the market start to shift, what we can see here is that the ETF launch took place in this part, which automatically meant that Bitcoin did surge due to the inflow, but technically the yield started to go up and the dollar was going to continue to show strength, which means that people really don't want to have risk assets at all. And that's why you can see that during this period, the increased amount of yields and the strength on the dollar didn't really push up the crypto market. So we can also see that since October, since this peak took place, it surged the markets heavily. So if this is going to go down, that is when the crypto markets can start having their bull cycle again. Now, also short summary here on the CPI data points, which showed that it increased to 3.4%, but it was less than 3.5%, so it's slowing down. Core has been going down, has been going up by 0.3%, meeting estimates. The regular one has gone up by 0.3%, but less than expected, which means that also core CPI was up 3.6% year to year, while it was 3.8% last month. So this shows that the inflation is going to come down, and it shows also that it's the lowest number since April 2021, and that's why you see this big strength taking place. Now, it's also election year, which means that QT reduction, as I just discussed, is taking place, and there's a soft pivot and also a cap on the interest rate. It's very likely that the interest rates are not going to continue. If the interest rates stay here, the US needs to print money because the treasury interest payments is going to accelerate to a level not seen before. So this is a chart representing the payments that they need to make sure to pay in the upcoming years. So this is a projection, and it needs to be super high in 2025. 1.7 trillion is need to be paid on the debt that the US has, which is 3 times as more than we had in 2019. Hey, there's the inflation, which means that they need to, if they do not rate cut in the next 6 to 12 months, they need to continue printing to making sure that they can pay the annual interest payments. So it's just not going to happen. It's the rate cuts are going to take place, and in the meantime they continue to do QE, which means that by doing QE you can easily see or say that crypto is going to start accelerating overall, because it's on a crossroad of either collapsing the entire economy, or it is by the fact that if they continue to do the rate cuts, the recession is going to come, and on the other hand, it is facing a case that they can simply do not pay their interest payments on the debt, which means that it's unsustainable policy, as Powell has mentioned. So now this is all taking place, and it is having a big impact on crypto because macroeconomic factors take into account that institutions want to allocate more or less into crypto. But why are altcoins suffering? Let's start discussing that in the next part. We are here to assist you and guide you through the bull and bear markets of crypto. In the past months, our consultancy has been developing and improving a lot, and we are happy to say that we are going to be opening up again for new clients. The consultancy aims to assist you with your portfolio through the entire cycle, built on your preferences, risk appetite, targets, and goals. In this strategy, we strive to get the highest amount of Bitcoin possible and protect your portfolio for any negative market circumstances, trying to establish a safe way of trading and investing into the crypto markets. Through the link in the description, you can reach out to our team, where you'll be the first one to know when we are going to be opening up in the coming periods. If you're interested, then I'd suggest to go there, send your interest, and I might become your consultant, leading you through the entire bull and bear market. In this part, I'd like to discuss the intrinsic crypto events which have been pushing down the price action of the markets. There are a few important topics to highlight in this matter. It's the Bitcoin ETF and the halving, but it's also the Ethereum ETF and the lawsuits which are taking place in the crypto ecosystem. First of all, the Bitcoin ETF. It caused a lot of momentum, and through the ETF, the prices of Bitcoin have established a new all-time high before the halving, which is the first time it ever happened. But as a result, what has been taking place with the altcoins after the Bitcoin halving? Let's discuss the charts before we continue. Now, the ETF was approved, and there are a few important items that we need to discuss. First of all, we've got the fact that since the approval took place, and we just discussed it previously, since the approval took place and since the yields actually started to go down, we saw that crypto was doing really well. So I've got a chart here which shows you the strength and weakness of an altcoin against Bitcoin. So in this case, optimism against Bitcoin, which technically started to break out since October, November, which was also the period where the yields started to drop, which means that the yields started to go down, and that was the period where crypto was flourishing, but also prior to the Bitcoin ETF, this was the actual strength that we saw. Now, the peak of the ETF, this momentum, was taking place during the first week of January. You can see that this peak took place on the 12th of January 2024. Here you can see that, which means that the launch of the Bitcoin ETF happened during this week. And that was why most of the altcoins started to suffer since then, as investors were looking to get their altcoin into Bitcoin, expecting to generate a higher yield on their altcoins than on Bitcoin than on the altcoins, which means that crypto native people have been selling their altcoins to Bitcoin, and traditional finance have been buying Bitcoin through the ETF. So everything was focused on Bitcoin until the halving, as prior to the halving we peaked, and since then we started to consolidate, and since then we also saw that altcoins are starting to show some strength again. But overall, we can see that the altcoins have been suffering a 70% correction. Even if you start looking at a few other examples, Arbitrum for instance, you can see the peak was taking place in the same week in which the correction was 73% on the altcoins since the launch of the Bitcoin ETF. So weakness on the markets based on the fact, on the crypto altcoin markets based on the fact that the Bitcoin ETF was approved. Additionally, altcoins rotated to Bitcoin. That rotation is going to kick back in, but there were also negative news items taking place which were pushing down the markets even more, which is the Ethereum spot ETF, which is likely going to have an approval or denial or delay in a week time. On the 23rd and 4th of May, we are going to have a case that we are having a resolution on a few of these applications. And the SEC is technically saying that Ethereum is a security. And there are multiple important parts about this. But the two watchers, Eric Belkunas and Jeff, are technically saying that the approval of an Ethereum ETF are close to zero, which is likely, especially since everything that's been taking place. But once you get these sort of news items, you're going to have a case that the markets are pricing in a negative scenario, which is what is taking place right now. And by knowing the fact that if Ethereum is going to go down, everything in the Ethereum ecosystem and altcoins in general are continuing to fall even more. So from that perspective, we understand that that's an additional layer of weakness on the crypto markets. And we also know that if the news item is going to be slightly more positive than negative, you could suspect that from there the markets are going to reverse back up. What we do know is that the chances are close to zero for an Ethereum ETF to be approved. In that aspect, why is that? Well, there are certain components that might be called a security, and there are two. First of all, we've got staking, and staking is if you look at it, it's some sort of dividend or yield that you create or get by holding and staking Ethereum. Of course, staking is a sort of investment return that you get out of holding the particular asset. It is very typical for DeFi to get such a yield, and then it's technically a security. However, in the Ethereum ETF, an Ethereum Foundation or in Ethereum blockchain, staking is remained for security purposes. So that is different. In that aspect, you would suggest it's either a commodity, but that is still unclear. The second thing is that Ethereum has been raised or started by an ICO. And the fact that it was started by an ICO is technically a security. So these two concepts are important to understand, and that is why it might become a security overall. So here you can see what is a commodity and what is a security. A commodity is a physical good like gold, silver, oil. We have discussed the Goldbacked paper. A security is more an investment product like stocks, bonds, and mutual funds. And that is the difference between the two, that if you're going to see a case that something is called a security, then there will be more strict rules before it can be applying for an ETF approval. And also multiple altcoins were classified as a security or unregistered securities, and that's why they keep on falling. While on the other hand, the CFTC has classified cryptos as commodities, which makes it interesting that that scope is still unclear. Overall, as I said, the SEC may think that Ethereum is a security, and that is based on the fact that there is the Howey test, and the Howey test is whether to determine whether a product is a security or not. One of the things is that an investment contract exists when there is the investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others, the ICO. You transfer some funds, get back the actual crypto, so that's the difference. Bitcoin isn't a security, it fits with the Howey test, but however, with Ethereum, we've got an Ethereum Foundation, which is an active role in promoting and supporting the activity. And if the SEC says that it's a common enterprise, it could check one of the 4 Howey boxes. And also the proof of stake, as I mentioned, might be a reasonable expectation of profits, and might be the case that that is classified as one of the boxes for the Howey test as well, through which you could say that Ethereum is a security. So this is technically what we're facing at this point. There are also different views on whether or not Ethereum is a security. Some people might argue it's not. It is all about the investment contract. It is all about the staking. The differences might be staking through an exchange or through actual Ethereum itself. By staking it through a node operator or through Ethereum Foundation, you are actually pushing forward the security of the blockchain. But while you're staking on an exchange, you might be just there for the yield, and then it might be different. So this is also the reason why in the recent applications you can see the amendments which are reducing the amount of staking or the actual opportunity to stake or get a return of staking in your ETF. That is getting removed, which is a signal that the parties are in contact with the SEC, making sure that they are compliant enough to get an approval. Now, there's also a case that there is a fight taking place against the SEC, and there's also a fight taking place against the Ethereum Foundation. So there are a few important data points that you need to make sure. First of all, we know that the Bitcoin ETF got approved because Grayscale stepped in with a lawsuit against the SEC. Now, Consensus is also doing this, and they state that Ethereum is a commodity. The fact that there's a deadline coming up on the ETF approval, it is going to be the 23rd of May, and we had a deadline on the 7th of May, which was the Invesco Galaxy Spot Ethereum ETF. They delayed this. They could deny it, but they delayed it by 60 days, which means that in that window, we are going to get more information. The 23rd is going to be such a deadline, but also it's expected in the coming 1 to 2 weeks that the SEC needs to make clear what is actually why they are thinking it's a security. It's probably going to be the 24th of May, but from that standpoint, we're going to see data that shows that either SEC is saying, hey, it's going to be the ICO part, or it's going to be the staking part, or it's going to be both. That's going to take place in the coming few months, and that's why every news item is important. All the deadlines are here. You can see that the first ones are the 23rd and the 24th. I think it's going to be getting a delay instead of a denial, and by the fact that it's going to get a delay, it's going to be pushing forward the markets and pushing upwards, through which we get into the final deadlines around August, which is way more important to realize here. These are the ones that are important to watch, and in between we're going to have the lawsuit of the Ethereum Foundation. We're going to get more information about the SEC, what they think about Ethereum, and we are having more lawsuits finalizing its point. The XRP lawsuit is getting into the final stages as we are finalizing the deadlines of briefs and opposition papers, which means that in the next 2 weeks we are likely going to find the final conclusion for the XRP lawsuit. It's very likely that XRP is going to win this, but then also XRP will not be classified as a security, which means that there's more and more arguments that crypto is going to survive. The final part regarding regulations is a bill which is called FIT21. It is set up to govern the US crypto markets. It's very similar to MiCAR in Europe, and it's going to build a framework for large adoption for everything related to crypto. And finally, after years of working on making this bill, it's going to be approved or denied, or at least voted on this month or the beginning of next month. So all these things are taking place in May and in June, and the markets are pricing in the worst. So every news item that is going to come out in the coming period, I think is going to be priced in already, because it's a negative sentiment, but it's also likely going to push the prices even back upwards if it is going to be slightly positive. As you can see, the economy is getting into a recession, QE is starting up, which is pushing crypto. There's a delay, not a denial. Staking gets removed. It is the US wants to regulate crypto, not decline it or push it away. Those are all signals that it's positive, and that is why you can make a very good investment thesis at this point. So as a conclusion of this entire video, I think the question remains, what should you do? First of all, there's a huge difference between the Ethereum and Bitcoin ETF, and we went through it. The hype and sentiment, that's a different layer than actually what it's all about. It's completely different if we look at the sentiment, but that can easily switch. You should remind yourself that the Bitcoin ETF at the start was also having the exact same issues as the Ethereum ETF. However, the Ethereum ETF is a bigger representation of the entire crypto ecosystem than Bitcoin is. So at this stage, every news item is getting reflected into a relatively negative way. So all the lawsuits and all the things happening with the Ethereum Foundation and the subpoenas that have been taking place, the XRP lawsuit, the Kraken one, we've got Coinbase attacking the SEC, all these things are taking place. We've got the House voting on FIT21 during this month. Everything gets a relatively negative sentiment, which means that I suspect that if we get a denial on the Ethereum ETF on these top two of ARK and the other one, if that is going to take place, I would suggest that we get an FTX type of correction, which means that Ethereum makes a drop of between 5 to 10% and then reverses back up because the news is in. The negative news is in, it's already getting priced in, but then it comes out and that's the actual bottom of the markets, which means that at this point the markets are pricing in the most negative scenario, that even if the negative scenario comes out, then it's going to reverse the markets. And I think that it's going to be a sell the rumor by the news type of thing. Now, if it becomes slightly better than we expect it to be, I think the markets are going to reverse. And because of the fact that Ethereum is a representation of the entire market, I suggest that the entire market is going to wake up because there is more confidence that we can see back in the markets taking place. So I think we went from super bullish to super negative at this point in the cycle. And I strongly suggest that you need to stay realistic, which is that I think that it's way better than everybody thinks it is. And if they wanted to deny the ETF, then I think they should be denying the Invesco one anyway. So I think that the markets are looking way better than most people think it is. Most people are looking at the price action of the markets, which has been rough, but it's a stage where I think that certain projects and certain areas and segments of the markets are getting undervalued at this point, and that's going to be brought back to reality in the coming period if everything goes according to plan. There's always a negative scenario, of course, but I think that this is a safe bet to do. Now, what am I doing at this point? I've said it before, and I've said it in the video as well, in the last week's video. I'm fully allocated into the markets, and I've swapped my Bitcoin towards altcoins. I think, first of all, it's a completely risky strategy to take out your Bitcoin and swap it to altcoins because it can go wrong. But I'm in the markets for more than 7 years now, and I like to take risky bets, in which I'm also monitoring it on a daily basis. So that's a little bit different. But I'm fully allocated in the markets at this point, and I've built it up with just altcoins because I think that this is a very easy chance to take. And there's a very easy upwards momentum to generate in the upcoming 1 to 2 years once the green light is going to be activated in the US. That at some point in time, I'll swap back the altcoins to Bitcoin and start stacking my Bitcoin. But by the fact that the altcoins are going to have that run, Bitcoin will be pushed up anyway. Extremely. And I think that in this cycle, Bitcoin is going to go up more than everybody expects it to go to. So I'm fully allocated into altcoins. I wouldn't recommend that at this point, but I think that the news is super negative, and I think that if you want to buy crypto in 2024, it's the time to do so. And I think you should be getting yourself positioned and ready for what's going to come. In next week's video, I'm going to be diving into my plan, and I'm going to dive into the altcoin investing. But today I wanted to discuss more about the macroeconomics and the stage of the markets. I hope you have been enjoying this video and have been providing content for you on your journey towards a financially stable future and freedom. If you did enjoy this video, can I ask you a favor and comment beneath on your thoughts of the video or content that you would like to see, or anything else that you would like to share with us. All your feedback is super helpful by building and continuing the level of content which we aim to provide. Thank you for watching, and I'll see you on the next episode next week on everything surrounding Bitcoin, crypto, and more. Ciao.